We're
ready, sir.
Yeah. Okay. Good morning. I hope you didn't get that earlier part on tape. Before calling this meeting to order, I will note for the record I serve as the acting chair of this meeting. I now call to order the meeting of the directors of the Bond Finance Committee of the New York State Urban Development Corporation, doing business as Empire State Development, for Monday, November 23rd, 2015. The directors have received the written materials in advance of the meeting. They're free to ask questions at any time. As noted on the agenda posted on the internet, we welcome public comment on the items on the following agenda. To ensure maximum opportunity for participation, speakers representing themselves may speak up for 2 minutes each, and those representing groups may speak up to 4 minutes, one speaker per group. Speakers' comments may address only items considered at today's meeting. Before we begin with the substantive portion of the meeting, I would like to ask directors whether anyone has any potential conflict of interest with respect to any of the items on the agenda. If so, I would like you to please make an appropriate disclosure on the record at this time. We will then be sure that you may recuse yourself from any discussion or vote with regard to those items. Any conflict?
No, sir.
Very good. Thank you. There's only one item on today's agenda. That item relates to the state personal income tax revenue bonds, and it will be presented by Rob Godley. Rob, when you're ready.
I'm ready. Good morning. This morning I'm requesting that the committee approve a resolution authorizing the sale and delivery of the New York State Urban Development Corporation Personal Income Tax Revenue Bonds, Series 2015 A and B. As stated in the resolution, the committee is being asked to delegate the authority to certain officers and employees of the corporation to establish within certain parameters the final terms of the bond sale and to take all actions deemed necessary to accomplish the final sale and delivery of the bonds. The bonds will be issued pursuant to the New York State Personal Income Tax Revenue Bond Financing Program and will be secured by a pledge of financing agreement payments made from amounts legally required to be deposited into the Revenue Bond Tax Fund. The Public Authorities Control Board approved the issuance of these bonds on October 28th. Proceeds from the sale of the bonds will be used to finance certain state facilities, certain highway and bridge projects, economic development projects, and certain other state-supported programs. The Series 2015 bonds are also being issued to refund debt previously issued by the corporation and debt issued by the Housing Finance Agency and to finance related cost of issuance. The bonds will be issued on a competitive basis as fixed-rate, tax-exempt, and taxable bonds, and will be offered through a single preliminary official statement, but will have separate notices of sale. In accordance with the attached resolution, the directors are requested to adopt a form of supplemental resolution, approve the form of the supplemental schedule, authorize the sale of the bonds on a public competitive basis pursuant to various documents connected with the sale and the delivery of the bonds, and authorize certain officers and employees of the corporation to take all actions deemed necessary to accomplish the final sale and delivery of the bonds. Please note that by approving the Financing Committee resolution, you will be establishing $1.5 billion as the aggregate maximum principal amount of the bonds that will be established, establishing a maximum true interest cost of 7.5% for the tax-exempt and 10% for the taxable, delegating to certain officers and employees the power to determine the terms of the bonds within the parameters set forth therein, including but not limited to the final aggregate principal amount of the bonds, the principal amount of each series of the bonds, the principal amount of bonds maturing in each year, and the final maturity dates, which shall be not later than 30 years after the date of issuance for such bonds, and the interest rates to be borne by the bonds, and to make such changes to the related documents as he or she seems or deems necessary and appropriate. Now, subsequent to mailing the documents to you, we were made aware of 2 items that need to be incorporated into today's vote. I'll read these items and these items will be incorporated into the final transcript. First item, resolved that notwithstanding the foregoing or anything else in this resolution, the preliminary official statement or the Series B notice of sale, or to the contrary, Some, but not all, of the taxable bonds may be sold directly to the state treasurer and not pursuant to the Series B notice of sale at not less than the same prices at which other reasonably comparative taxable bonds are initially publicly offered by the purchaser thereof, except less purchaser's compensation to the extent included in such public offering prices. And the next one pertains to the environmental review. ESD staff has determined that the requested authorization constitutes a Type 2 action as defined by the New York State Environmental Quality Review Act and the implementing of regulations of the New York State Department of Environmental Conservation. No further environmental review is required in connection with the authorization. The first item that I mentioned here is pertains to the New York State Treasurer that has approached us last week with a desire to purchase some of the competitive taxable bonds. So what's being discussed right now and under consideration is that once the taxable bonds are offered to the market, we will then sell the same yield to the state treasurer. So he will be buying the bonds at the market price that was given to the market. The second one just pertains to the fact that, as far as the items being considered in today's meeting is that we are not making any environmental review on any of the projects that are being financed by the bonds. We're only making taking a vote on proceeding with issuing the bonds. Right now, the bonds will be sold on a competitive basis on Tuesday, December 8th. The amounts that we are financing at this time, the tax-exempt new money will be $995 million. The tax-exempt refunding amount is $91 million, and the taxable amount is $225 million. The tax-exempt bonds will be sold in 3 tranches based upon their maturities. We will sell one tranche with maturities up to 10 years. The second tranche will be maturities between 10 and 20 years, and the third tranche will be for maturities 20 and longer. The first sale will occur at 11 o'clock, followed by the second sale at 11:30, and the final sale for the tax exempt will be at noon. We will sell the taxable bonds at 12:30. And as with prior sales that we've had, when the day is over and the numbers are finalized, I will email the board members with the results of the competitive pricing. Any questions?
Yeah, has the final amount or the size of the offering been fixed, or is that still?
What's happening, it's pretty much finalized right now, but we are still going through tax diligence with bond counsel. So what's happening there is that bond counsel is looking at each individual project to see whether or not they could be done on a tax exempt basis. That process is still happening. So based upon the findings there, that could change some of the dollar amounts. But this is pretty close to where it's going to come out.
So let me get the numbers right. 995.
That's going to be the new money for the tax exempt.
Tax exempt. 91 is what?
That's the refunding amount.
That's refunding of the 990. Out of the 995, you're refunding 91.
No, 91 is already existing debt that's out there that we're
That'll
refunding.
be refunded.
Yep.
Right, yeah, I get that. I misspoke.
Yep.
And then the 225 is taxable?
That's correct.
Okay. Now, what's the criteria for whether it falls into the being able to be bonded non-taxable and taxable?
No, this is, this is what the tax bond counsel is going through. There's certain parameters that they have to judge.
What are they? Anybody got? Briefly, I don't want to find out.
We have bond counsel right behind me, and they could answer this question.
What do you guys look at?
Well, the key thing is what's the private use of the facility. If private use is beyond a certain level, then it can't be refunded on a tax-exempt basis. So that's the heart of the diligence. They need to know.
What do you mean private use? You mean a factory or a...
No, let's say you had a facility that was a state-type facility, but there was a newsstand in the first floor, there was something else in the first floor, there were other shops. You have to see what the private use is. Now, if it's just the newsstand, you're probably well within the limits, but some of these places there's a lot of private use, and you have to calculate that and see if it goes above the statutory parameters.
Private use being a newsstand downstairs?
Private use being something that's non-governmental.
Yeah, right, okay.
And even for governmental, some of the projects, some of the economic development projects, they have to be for capital purposes. And so sometimes we fund things that may not be deemed capital, or we have grants that wouldn't necessarily be for a tax-exempt purpose because they're not capital, but we still want to make the grant.
In this environmental review, who then does it?
Well, what's going to happen is that,
I get the fact that we won't, but
Yeah.
we're going to issue these bonds. Is somebody going to do it after the fact? Or?
the full board, when the projects are taken to the full board, if there's an environmental...
Each one of them incrementally,
Yes.
yeah.
Yep.
Okay.
Mm-hmm.
Yeah, that's what I thought.
Have the projects already been identified?
Yes, projects have been identified. We're funding for the projects right now, but, some of the projects have not come to the board, the full board.
Can you talk a little bit more about what are the types of projects that are going to be funded?
Brenda, can you?
Sure, absolutely.
Brenda's from Loans and Grants, and he's our...
So it's the typical.
Coincidentally, he happens to have a list.
So I at least have the the general funding source list, but it's the typical month after month type of projects that come to our board. So a lot of the projects, for example, are on the Buffalo billion, those type of projects. So just the one biggest one is that Riverbend project.
Right.
Yeah, but in essence, any of those grants and loans that we're taking to our board that we're ultimately issuing debt for.
Is it largely construction?
It could be a combination of construction. We also fund multiple times machinery and equipment acquisition.
Sure. All
And
sorts of
obviously
stuff.
just anything in the parameter of capital.
Sewer systems and all sorts of things.
Yep, absolutely.
So,
And just in terms of volume, a lot of the bonds are dedicated to also state facilities. And I think one of the largest designations is to prisons. Prisons are like almost...
In this issue, talking about this.
in the issue, yeah.
And
in this-
transportation, it's going to be over 400 million, it's going to be dedicated for transportation projects.
new ones.
Well, how exactly how DOT, but basically, yes, new.
Okay. Tappan Zee Bridge?
No, that's
No.
not part of this.
That's a separate deal.
That's a separate deal. Yeah.
That's throughway.
Where do we get the interest rates?
Well, the interest rates here, these are really...
Wide latitude.
That's
Boy, they seem.
Yeah, no.
Yeah.
But, based on some of the preliminary numbers runs that we've done, Rob...
T-bills are like $2.95.
Yeah. No, these are just indicative rates that, we're looking at right now.
Yeah, kind of circling.
We would say for this whole transaction, the taxable and taxable and tax exempt, we'll get something like, 3.35%.
Yeah, right.
So the rates I gave you are just, the wide end of the range that, we're not going to see anything like it. We'll see something more, reasonable.
Just the maximum.
The
Yeah.
purchase of some of the bonds by the state treasurer, is that unusual or is that typical?
No, this is the first time that the treasurer is doing this, and in fact, we still have to explore everything behind this. We wanted to get your authorization to, to even consider
Yeah,
doing
I've never
this.
heard of it before.
Yeah, me either, that's
yeah.
why I was...
Yeah, but it's it makes sense that, we're going to be going to the market, we're going to get a competitive bid for this, and we're pursuing whether or not the state treasurer can also match that bid.
The state has a certain surplus and wants to park its money somewhere,
Yeah.
so.
And this has a nice return since it's
Oh, sure,
taxable
it's
for
better
them.
than a lot of other alternatives.
Yeah, so we're really the first agency that they've approached to do this. We're exploring this, and, if we can accommodate the treasurer, we will. But that too, when I get back to you with the final results, I'll let you know whether or not we did go ahead with this.
Where would
Are
they
there-
go to?
Are there legal issues or economic issues that they're...
There's legal.
Legal issues.
Where would they go if they, they're looking for other sources like?
No, they would do exactly what we do. They would invest in agencies and treasuries, which would be a lower yield
Yeah,
for them.
junk.
Yep. So this is,
Not junk, I mean,
The opposite.
junk rates.
yeah, exactly. These are
I didn't
permitted
mean that-
investments.
I didn't even mean that. Low rates.
Mhm. These are permitted investments for them, but, giving a slightly higher yield.
Right. Okay.
Interesting. It's state taxable bonds, but it's not taxable to them.
That's correct. Yep. Mhm.
Makes sense.
Anybody else? You guys,
No.
any other questions?
Thanks.
Good. Thank you.
Any comments from the public regarding to this item? No. If not, is there a motion to approve?
Move.
Is there a second?
Second.
All in favor?
Aye.
Opposed? I think we've carried the day. Thank you very much. There being no further business, is there a motion to adjourn?
Move.
Second?
Aye. Second.
Thank you.
Aye.
Thank
Thanks,
you very much
everybody.
and happy Thanksgiving.
Thank you. You guys.
Sorry.